So this is basically what I look for, and it's very simple concept.
Carrier, their information.
So this is what I call like a break and retest of structure. And this is, man, it's so easy. It's so easy if you're there. You know what I mean? If you're looking at the charts and you can find this setup, it's so easy. So what we have here is see how this was like trending down? It was making lower lows. So we got a lower low here. We got a lower low here. Now, when it broke this structure, which is this trend line right here, when it broke this, it came back down and retested that. Then it came up and it created a new high. It's called a higher high here. So this is our previous higher high, came back up, made a new higher high. Then what it did is it made so we got our higher high, came back down, made a higher low, meaning this is our low, this is a higher low right here. So we got our low, higher low. Then it came back up, and this is what I like to see. And it made a new little higher high right here. Let's actually classify this one as the higher high. Now, what we see here is we have our structure, we have our resistance. We can see that price rejected this area right here. You see this purple box? So it tried to not break this, but it did end up breaking it, creating this new higher high. Now, what we look for when the market's making higher highs is we look for higher lows. So we got another higher low right here. So we have a new higher low right here. Now, this is the trade that I took today. So we got this is what we call price action. Higher high, higher low, higher high, higher low, break of structure, break of resistance. So we finally broke through that resistance. Now what I look for is I look for this red line right here, which is our 50 moving average. And it's not always going to be on the 50 moving average. When it is on the 50 moving average, it's much, much cleaner, much better, more just of a pure solid trade. So when we have that higher low here, what I look for is called an engulfing candle. So can you see this this green candle right here? Can you see that?
Yes.
Okay. So we have a red candle that's right here, and then we have a green candle that engulfed, meaning it closed above the body of this red candle. So it engulfed right here. Now, this is the trade that I always take. This is basically the only type of trade that I'm taking right now. And what I do when I find this and I get that engulfing candle right there is I place my stop loss just barely below this little structure right here. And then I look for where I think the profit target's going to be based on the next confluence. So I take the buy right after this candle closes. So this is exactly what I do right here. As soon as the market's right here, I get ready to place my buy. And like I said, this can happen on any time frame. So I place my buy right here, I put my stop loss below. And sometimes the thing with this is like sometimes your profit target's going to be different, and that can be based on like higher time frames, or it can just be based on kind of a factor of things. We're going to have to dive into that on our next one. I just want to get you the grasp of what I look for when I'm looking to take a trade. So I place my buy here. As soon as that candle closes, I place my buy here. Stop loss goes here. When price reaches like maybe an area of uh where it can reject, sometimes I'll put my stop loss in profit. That's going to be another thing that we learn later on. But this is essentially what I do here. And
So,
then
okay.
absolutely. So you see this? This is kind of very clear. We got the structure, break of structure, retest of structure, engulfing candle. So place my buy, and this is exactly what happened today. Start rising, boom. And you can see there's another engulfing candle right here. And then take profits hit right there. So this was a 1 to 3.68. So meaning if I did lose this trade, I lost whatever I was risking, probably pretty low. Probably would have lost about $200 per account. But my take profit's about 800 per account. So that means that like if I lose 2 trades in a row, right, and I do more trades like this, then it's going to take me about, I would have to lose 3 out of 4 trades to not be profitable, essentially, because of my risk to reward ratio on this trade. Now, it's not always going to be a 1-to-3 or 1-to-4. Sometimes you're going to get a 1-to-2. It's just dependent on, and like obviously, the higher the risk to reward, the better.
Okay.
So
Also,
yeah. So price, I mean, this is literally exactly what I do. So price flew up right as this was all happening, and that's pretty typical for this pattern here. But you just need to grasp that concept of the break and retest of this structure. So we got resistance, turns into a support, engulfing candle, 50 moving average. There's 3 confluences right there. Super simple. You just got to look for the higher lows, the higher highs. So the higher highs into the higher lows off of a break of resistance into support. And it's the same thing vice versa. If you're going for a short, it's going to be the same exact thing, just opposite. So bought this, made some good profit. So that was this trade today. Now,
Oh, wow.
yes, yeah, so yesterday, or was it yesterday? I can't remember. Oh, so it did it here too. This was just a little bit ago, actually. But it's a good example of another move that you could take. So we have our high, kept coming down. We have a lower high here. So here, let me mark this up for you.
So would that be a higher high?
So that's gonna be, yeah, that's gonna be our high point right there. So it's actually based on, if we look left, it's gonna be a lower high. Failed to break this high right here. We have our high, came down, tried to push back up, failed to break. So that's what we call a lower high. Now, in markets making lower highs, we look for sales. We don't look for buys, we look for sells. So now what we have this support right here. This support turned into a resistance. We have I like when my engulfing candles are smaller. So this candle engulfed that previous green one right there. You see that? So this red candle pushed or closed lower than that green candle on an area of structure. So we have our support turned into resistance, engulfing candle to the downside. So how this trade would work, you place the sell, and I would probably put my take profit right at that previous low there. This is where you get those 1-to-2s sometimes. So this is a 1-to-2.3, and obviously it went lower, right? So it went lower than the 1-to-2, but I would have closed at this previous area of structure right here. So this was my take profit right in here, just because we know this is a support area. And that's just like, that's how I like to do it. Now, so it came down. Soon as it gave me that engulfing candle right off that 50 moving average, which is that red line, we know we have a support. Support broke, turned into a resistance, engulfing candle to the downside, take profit goes here. So as soon as this candle closes, this red one, I take the sell. Does that make sense to you?
Yeah.
Okay. So that's trade number 1 right here. Now we have the same thing where we essentially could have had 2 trades right here. So this trade would have already been over. Now we have another trade, and it made a lower high. So we have lower high and then a lower high right here as well. We had this candle, red candle, come off that green bullish candle, close below it. Lower high off of a structure, off that 50 moving average, take the sell right after that engulfing candle closes. And you can bring it to that next area of resistance essentially. And like I said, my stop loss goes just a little bit above those wicks right there. Because typically when you get an engulfing candle, it's going to flow with the direction that you think the market's going to go. So we got the lower highs, engulfing candle obviously dropped.
So you typically don't get wicked out?
No. Honestly, you will sometimes. That's just part of the game. You got to accept it. You got to move on. You got to go to the next one. You will occasionally. Just part of the game.
Yeah.
But the thing that keeps us profitable is the fact that we have these good risk reward ratio. And if we do take a loss right here, the loss would have been much smaller than the win. You know what I mean?
Yeah.
It's a
Yeah.
1 to 2.8 here. So this is a high quality setup right here. Very high quality setup.